Hello traders, it's 𝗬𝗏𝗧𝗏 here. Welcome to this training session. In today's session 141, we're going to be recapping a number of trades taken on gold, the yellow metal. Now what I cover in this session you can apply to any market, whether it be futures, forex or stocks. So as we do get underway, very quick disclaimer: there is a risk in trading. Please don't trade with money you can't afford to lose. If you haven't already requested my free day trading ebook, The Truth About Day Trading, in the description link below, you can put your details there to download a copy, as well as my $2,000 a day blueprint training video, which I'll be referring to in a couple of moments, and you can download that along with a training video on how to actually use that. So please see the details in the description link below. I'll get it out right in a moment. Very quick advertisement: if you're not already a member, you can become a member for $297, where you get all of my indicators. There's over 200 hours of online video instruction. There's I think last count there was 35 PowerPoints. It's been described as a gold mine. As well as that, you can attend 1 month of live coaching sessions. So you get 8 sessions in the month. Each session goes for 2 hours, so you can attend these group sessions every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. If you can't attend the live sessions, they are recorded for you to review at any time. After month 1, if you wish to continue, which you probably will, you can then drop me an email and say, hey, please send me the sign-up paperwork for the ongoing coaching. End of advertisement. Let's get into this. So which are my favorite markets to trade? Well, when it comes to the futures markets, the Russell, the Nasdaq, and the 6A. And the reason I've grouped these three are $5 a tick. Now you could throw the YM, the Dow, in there if you wish. Just the RTY pretty much takes over the Dow for me. You've got greater volume, same sort of volatility, etc. So I do prefer the Russell. For Nasdaq, I have 2 nicknames for it. One's a nifty Nas and one's a nasty Nas. It can be extremely volatile, and the great thing with both the Russell and the Nasdaq is you can trade the micro contracts on both of those. And I should say the same applies to oil, gold, and the ES. All of those there that I just referred to have micro contracts, which are at 10% of the value. So you can sort of be trading there, get underway with a smaller account for only 50 cents a tick compared to $5 or $1.25 a tick or $1 a tick. Now the 6A, the currency futures, it's typically 50 to 60,000 contracts a day. You get some nice patterns, but it can be dead. But I love the 6E and the 6J. Both of those are 625 a tick. You just get some great trading during the Globex session with these markets as well. That is after hours. Then we've got oil and gold of course is what we're looking at today, and the ES. Now with gold, the patterns that I show you here you can apply to any market. It doesn't matter whether we were trading the Russell, the NQ, gold, the ES, all of the same patterns apply. Now gold has totally changed this year. It's a total different market. So typically on the micro contract we'd only see around 30,000 to 50,000 contracts a day changing hands. Now it's up to 350 a day, and on the big contract 169,000 a day, because what you've got with gold is some fantastic volatility. You get these smooth waves as we're about to look at, and that's what you want. You want to be able to surf these waves. Now my target there, as I mentioned up there, is 700 per contract per day. The challenge with gold is that you need to have a larger account. Now if you want to trade, say, the micro, and this is an 8 tick, I recommend you trade the micro 8 tick with $1,400. And the reason being, we never ever wish to risk more than 2% in a trade. So if you were trading, say here, the big contract, you need to have $14,000. so that will limit a lot of traders initially. However, as you're about to see here, and this result here was within 14 minutes, and I'll show you the next 2 days straight after that. We'll have a quick look at that at the end of this session, what happened. This is Thursday the 30th of October, then there's Friday, and then there's today. Now when I say there's today, it's Sunday afternoon US time. In fact, it's just turned 12:02 Central Standard Time, and the market's open on Sundays, and it's what we call the Globex session. Now what if you don't have the required funds? Well, let's just say you start off with 1400. Now I know your broker might say you can start off with a lot less. However, you need to remember the risk. That is, you're risking up to $28, which is 2%, $1,400 per trade here. Now my target for you, and a sensible target, as you're about to see, is $70 a day. So I've rounded this up at $2 per trade commission. So you need in commission, so you need 4 5-step trades a day, which comes to $80 less your commissions. It comes down to a net 72. And look where you are in 12 weeks. You now have the ability of rolling over and trading the big contract. Now if you're not familiar with my work with this Excel spreadsheet, you only start trading in a second contract once you double your money. So technically speaking, in 12 weeks you could have a potential there of earning up to 3,500 on trading 10 micros or 11 micros. That's a true potential of this market. Now once you then roll over, you've got the 14,000 plus required to trade the big contract. Look where you are in 7 weeks, trading 3 contracts, a potential of 10,000 a week. Then we go out to 10 weeks. Look at that there, you're 20,000 a week trading 6 contracts. That's on netting $700 a day. Once again, 4 5-step trades a day. I'll show you in a moment exactly what I mean by that. So what we're looking for here, traders, as you'll see in a moment, we're looking for the waves in the market. Now the arrows you can see there, that's my turning point indicator. So you could trade purely, and I'd recommend with the trend. Here I had a loss, by the way. We'll talk about that in a moment, but trading with the trend, but I'll show you that in a moment. So let's go to the recording, then we'll go to the charts themselves and have a quick recap. So with the recording, I'll just give you a rundown, a summary. So just there, I'm waiting to go short. So now I'm filled. So in between at times I may pause the video just so while I'm waiting to be filled. Now you'll see here that I'm now increasing my target. So I think I initially had there it was either a 20 or a 24 tick target. That's generally what I'm after. By the way, these are what I call steps. So when I say I need 4 5-step moves, and let me pause just a moment, I just need 4 trades to give me 1 2 3 4. Now on an 8 tick, what that means is each step is worth $40. So you go for 4 5-step moves, that's $800 less commission, less any losses, of course. So what I've done is identified here for you just plain vanilla entry points. Okay, these are just plain vanilla entry points. Everyone watching this video, once you understand how to trade the strategy, is very straightforward. Now you may have noticed I just increased my target here. So we just had a major reversal here, little bit of divergence on the entry chart, but there was what we call a big T3 on our higher time frame. So let's continue with this. So looking at coming down to this level. Now this generally, this is pretty much a mechanical approach to trading. So that level down here, I was just pointing out, had a lot of and just here, this is what I'm doing here is referring to my higher time frame called an anchor chart. So what we want to be doing is trading in the direction of the higher time frame. And so my target here that I'm targeting on the entry chart is based upon a rule that we have on the anchor chart 1, but very rules based in the approach, and everything I'm showing you here, trading here, is all based upon a pattern. We're very good as traders in identifying patterns. So here you'll probably see in a moment, I'll actually go to just lock some profits in here, and the reason being, quite often you'll get a bounce around this area. So we've got a pivot just below, and you'll probably see, I can't remember exactly what this is 3 days ago now. I'm recording this, as I said, just very early Monday morning, so this is Thursday, so a few days ago now, and there's been 2 trading sessions since then. And by the way, this is at 2 a.m. Central Standard Time, which is around the London, the key London market. And you can trade gold, as you'll see in a moment. Basically here, now we're filled. Basically 23 hours a day you can trade gold. It tends to get very quiet in the afternoon session, the New York afternoon session, but there's still some good trading. Now just here, gone long here, this is a classic setup called a 2B, and this is just a very mechanical approach. You've got one there, you had one there, you had one here, didn't mark that one, I had one there, had one back there. All of those are what we call 2Bs. Okay, so here I've got a target there, might have been 22-24 ticks. Generally on the 8 tick I have a 28 tick stop and a 24 tick target, but I'll go for a larger target if I've say got a pivot in front of me or a major area support or resistance. Okay, so we're out of that trade. So just going along here, so just moving this along a little bit. So I've now gone long again, so we've now got another 2B entry. Now I just have you notice there that this high just here is lower than that one, so that can at times ring some alarm bells. In fact, as you're about to see, this is going to be a loss. Now my stop is 1 tick below the little swing, so normally I'd have my stop 1 tick below, 1 tick above, and it starts to go against me pretty much straight away. But this is where traders got to learn to think in probabilities, not certainties. Anything can happen with the individual trade. So there we're stopped, so we've got to get straight back on the horse, and right there, and let me just pause this for you. So right there I got in a wee bit earlier, and this is what we call a 3B, by the way. And by getting in earlier, I've also got a smaller stop loss. Okay, so there, see there what my target was, 700 per contract. So now this is our 4th trade. So I'm just looking here. When I say I'm looking, I'm in the trade, no voiceover on the actual recorded session. Now I do have a break even. Usually I'll go to break even at 18 ticks, sorry, usually around 18 ticks. Sometimes I'll go to break even and I'll bring my stop back down to where it was originally if I think I might get a bit of wriggle in the trade. So this is trade 4. We have that end target. I believe in what I call POQ, the power of quitting, hitting a target, and see here now just there I just noticed there my stop was well under that swing point. You may have noticed then I then pulled that up, so it's 1 tick below or thereabouts, 1 or 2 ticks, same difference almost just below the swing. Now I've gone to break even just here. Well, that's automatically, by the way, goes to break even plus 2 ticks, and there I'm out of that particular trade. So we'll just give it a few more minutes because I want to show you what happens thereafter. Okay, so here I'm just doing a bit of a summary here, just going back on that same recording over a couple of the potential trades, and there were quite a few that would have just been plain vanilla entries. So we can see here a great result there out of that. That was all in I think about 14-15 minutes. Now just here I'm showing a 78% retracement. That's from this point to this point. Now I apply Fibonacci retracements more out of interest, but I'm still amazed at how often we bounce off these key points. Now just here I'm probably about to point out that price action is breaking just here, and we call this a T20-1. so it's a T10, 3B, 2B. These are just mechanical patterns. Okay, and once you understand the pattern, okay, that's called a T10. Whoops, that's not a T0, it's meant to be a T10. Now see this black line down here? This is also identifying for me that on the higher time frame I have a key level down below. Now I'm not in this trade, already got POQ, but what I'm pointing out here is we've got a very high probability chance of getting down and hitting that level. So if you're still trading, perhaps you're one of the young guns that likes to trade for 4 or 5 hours, maybe a couple of hours, you might be just waiting for this, but here you'll see in a moment we'll come down and we'll hit this target. Come on, get down. Might just move this along a little bit. Okay, so now we're coming down and see there, so pretty much I knew we were going to hit that. Once again, no certainty, it's just a very high degree of probabilities that we were going to hit that point, and that's what we call, sorry, a T12. And generally with a T12 you'll then look at it, maybe you've got a lower low, maybe you'll get a lower high just here. What actually happens? Okay, the recording stops at that stage. So let's now just go back and I'll just pause this. We'll go back to what happened after that. Okay, so we're off the recording. Then you had another 61 point, and that's from that point to that point. Now these are key Fibonacci numbers. So I talk a lot about fib in sessions, but don't worry, you don't need to understand fib levels. You look where I'll apply a fib level. If ever I'm unsure about a trade, I might just apply that and see what I get. Just be blown away at how often some of our key levels get hit. But you can see here we're then falling, we're coming down, and now we're starting reverse. And just say this is what we call a T3 pattern, and this is a T10. Now a T3 is a reversal strategy. For an example, up there that was a reversal strategy. I recommend all new traders stick with trading with the trend. Now I want to show you a little trick here. And even this one here, this is what you call a two-legged pullback. So as you gain experience, you just realize that a lot of these legs, see that there, it's the same size. And so it's interesting. You don't have to understand how they work early in your trading career, but in time it will make you money. Now this is what I want to show you just here. How do I know when I'm going to have a possible or a potential reversal? This, for members watching, this is a double T3, so even better as a reversal. But then you may have noticed on some of my screenshots and video I had what I call a MACD-BB down here. And for members watching, and for even traders that are joining me, I only have the MACD-BB for NinjaTrader, but I've got special settings. You can set up any MACD, basically modeling this over here on the right. But what I was about to say, if ever I'm not sure of a reversal, what's this telling me? So this has told me, well, down here I had a T3. That tells me a double T3, I'm going to have a reversal of some sort. But then I've got this one just here sets up. Well, we come up here, you've got a potential bounce there, but we look down, very strong indication here we're going to reverse. And notice here the turning point indicator there and there. That's telling me long. This is telling me long. Now see that one there, that's telling me potentially short just there. Now let me show you a few hours later. So what we've got here, this is basically nearly 24 hours later, exactly the same chart, the 8-tick gold, and then we had 2 from 2. Now once again I'm in a T3 pivot bounce. When you've got certain types of setups that are hard up against pivots, they become very high probability. Reversion to the mean trades are great, divergence trades are great, and I use 2 types of pivots. I use traditional pivots and camarilla pivots. So I've actually recorded this, and I'm going to do another video on this, and you can just see then the market once again just took off like a rocket, and you could have just continued to trade gold. Just look at your turning point indicators and away you go from there. Now I'm recording this, as I mentioned, on a Sunday, now just very early Monday morning. So let me just show you. So that was Friday you've just seen. So let me just show you what happened after the market opened. So with this, I had no intention of recording, and so it's just trading away. So I took a long, then I had another T12 up here, and then I started to short just there, and I thought this will be a good example to show you as traders. So I just hit record on this last. Now I can't remember where I left off here. I thought I'd hit record again, but never mind. Now we're recording. Okay, we're now recording. What I was pointing out here, this is just from today's trades a few hours ago, where I had no intention of recording this, but I just thought, oh, the last one, I'll just pin that onto the end of the other one. So this is 3 from 3, nice little long here, nice short T12 for members watching this, little retracement there, but then I took this short here, and this short, traders, I'm looking at targeting down here at the current day's low. Now just move this along a little bit. Now see here, my target is just over the current day's low. Sometimes you come down and kiss it, other times you punch through. We'd already come down and tested it 3 or 4 times prior to this, so I was quite happy to get out. And once again, I just had that target of 700 per contract. So just there, see that there, I wanted to bring it down. I thought, oh, I'll bring it back up again, but it stopped me out anyway. And I picked up a few ticks. I then ended up hitting my target per contract that I was after. Now let me show you then what happened straight after that. So I was feeling pretty happy with that 700 per contract, easily hit that, but then a few minutes later we finally punched through that low, by the way, but then I just could not help myself. I then had this beautiful downtrend. And if you looked at your anchor chart 1, you would see that setting up just here. This is called angulation here. Great angulation, great downtrend, great setup, and bang, thank you very much. It's now 4 from 4. So I'm going to do another training video or another recap session just around that, probably next day or 2. But traders, this is not rocket science. It's a matter of learning these patterns, and that's what you're learning, not only the recordings but also in the live and recorded coaching sessions. Also, make sure you subscribe to my channel to make sure you're kept up to date. Once again, all of my indicators are included. There's no upsells. If you're using a platform where I haven't custom coded the indicators for, I give you the settings so you can model my charts on just about any platform or charting platform out there. So traders, I hope you picked up some ideas out of this. This ain't rocket science. This is about learning exactly where we're looking for these bounces and the patterns that come with that, and then the rules based entries that we then have around those. Okay, traders, look forward to having you as a member. You can join below. Make sure you subscribe to my channel, and I'll see you on the next video.